Welcome back to our weekly market wrap-up. Indian equity markets ended lower this week, with Nifty down 1.2% to close at 25,149. Investor sentiment turned cautious due to global trade uncertainties and the upcoming Q1 earnings season. A fresh round of import duties announced by US President Donald Trump raised fears of tariff retaliation, adding to the volatility. Stay tuned. By the end of this video, we'll walk you through all key developments and what to expect in the coming days. His week, Nifty 50 declined by 1.2% to 25,149. The BSE Mid-Cap Index dropped 0.6% to 46,291, and the Small Cap Index lost 0.7%, ending at 54,484. These numbers reflect growing risk aversion across investor segments amid global trade tensions and earnings uncertainty. Let's take a look at this week's key domestic economic indicators. India's foreign exchange reserves rose by $4.8 billion to reach $702.8 billion for the week ending June 27th. This marks a continued upward trend, offering a buffer against external volatility. The surge came largely from a $5.8 billion jump in foreign currency assets, now at $594.8 billion. However, gold reserves declined by $1.2 billion to $84.5 billion, slightly trimming the overall gain. Other reserve components also improved. SDRs rose by $0.2 billion to $18.8 billion, and India's IMF position increased by $0.2 billion to $4.6 billion, highlighting the strength of India's external balance sheet. Globally, markets remained volatile due to escalating trade concerns. Key macroeconomic releases for the upcoming week, including China's Q2 GDP and US inflation data, are expected to influence global risk sentiment. Investors remain on edge as global inflation and geopolitical pressures continue to shape capital flows and equity trends. Among this week's top gainers, Jaiprakash Power surged 26.6% on buzz around a potential Adani acquisition and renewed investor interest in infrastructure stocks. Glenmark Pharma jumped 22.3% after a $700 million cancer drug licensing deal with AbbVie. Alchemy Solar gained 18.3% following expansion announcements and robust institutional interest. On the downside, the top losers were BSE Limited declined 15.9% amid a deepening SEBI probe into options manipulation. Trent Limited dropped 13.4% due to concerns about growth slowdown and stretched valuations. MCX fell 10.6% on weak profit growth and lower trading volumes. Hero FinCorp completed its second pre-IPO funding round, raising Rs 50 crore from Vatikuti Ventures. The total issue size is now pegged at Rs 790 crore, signaling strong investor confidence. Meanwhile, NSDL's IPO is around the corner, but its unlisted price has corrected nearly 20% from recent peaks, a sign of recalibration in private market valuations. MSEI plans to raise 1,000 crore from venture capitalists, brokers and AIFs to revive its operations and boost market presence. Other high-interest unlisted names include NSE, Apollo Green Energy, Farmezi, CSK, and Tata Capital. That wraps up this week's market highlights. Here's what to watch in the week ahead. Markets may consolidate in the near term as concerns over global tariffs and Q1 earnings weigh on sentiment. Valuations remain rich, capping upside potential, though selective buying may emerge in resilient sectors. Domestically, eyes are on WPI and CPI inflation data due on July 14th and the trade balance on July 15th, both crucial for macroeconomic stability signals. Key earnings next week include July 14th, HCL Tech, Ola Electric, Tata Tech, July 15th, HDFC Life, Isiki Lombard, HDB Financial, July 16th, Tech Mahindra, ITC Hotels, July 17th, Axis Bank, Polycab, Wipro, Geo Financial, July 18th, Bandhan Bank, JSW Steel, L&T Finance globally. Watch for China's Q2 GDP and retail sales, July 15th, US inflation and PPI, July 15th, 16. Japan's trade data, July 17th, US housing and inflation data, July 18th. That's all for today. Stay connected with Ticona Capital for more insights and wealth-building opportunities from the themes of the decade. Explore more on ticonacapital.smallcase.com to know more. Don't forget to like, comment and share. See you next week.